Maxime Laurent-Bellue, Deputy CEO of Tikehau Capital, and we're going to talk. Thank you very much for joining.
Thanks for having me.
We start with private credit. We were just saying in the studio that at least parts of the private credit space is quite tense right now. So what are the conversations like here in Berlin for you, and how do you judge the situation?
Sure. I think everything has been written and said about private credit these days. The first thing I would say is, importantly, I think the underwriting playbook has been reshaped, right? Just on the back of the environment, which is fast-moving, very uncertain on many fronts, right? We're on the crossroads of a technological disruption, geopolitical disruption, financial disruption. So the underwriting has to adapt, and I think it has adapted. It means essentially back to basics, more discipline, more diversification, thinking about portfolio construction, thinking about downside protection. I think most players are there. And the other thing I would bring up is private credit has grown and has become a much larger asset class, right? So traditional direct lending is probably on the spot, but there are other strategies that have been developing, like credit secondaries, which are very, very much adapted to this environment and providing very good risk reward.
When we talk about the tense situation, we almost always talk about funds which are domiciled in the US, yep, where retail investors especially, but also now bigger investors don't get their money out as fast as they want it to be. Is the situation similar in Europe, or is there a difference between the US and Europe?
No, it's typically one feature where there is a huge difference, right? Even in the US, it's actually a small fraction of the market, probably 10 to 15%. And in Europe, it's much less than that. So this has been on the headlines, obviously, but the dynamics are very different. The other thing I would say is that these vehicles, they're usually called semi-liquid, and that's for a reason, right? They're liquid until they're not. And this is actually well thought, right? Because the main goal of this is to protect investors.
Yeah, let's move on to private equity, which is normally always illiquid for a certain time. How do you see the situation unfolding here in terms of money being able to be deployed in Europe versus the United States? Which assets are you looking at?
So in private equity, I think the market is, there is a bit of a bottleneck in the market right now, for all good reasons, right? All the uncertainties I was referring to. The underwriting environment is just very difficult for anyone, for a credit lender, for a buyer. So people are probably more cautious. On our side, we focus on some very strong convictions in our PE business. And there are essentially twofold: decarbonization and aerospace and defense. And it's funny because I think it illustrates how things move quickly, because if you think about it, for long, software was the winner, right, of the sectors. And aerospace and defense was not so much a winner. And today, the situation is quite reversed, right? People, I think, generally, and especially here in Europe, are very keen and eager to allocate to aerospace and defense. Yeah. Which is our key focus.
But how easy is it to find assets in the defense space, especially in Europe? Because clearly, as you were saying, for so many years, decades, that industry was just off, like not touchable, right? Because of all various aspects. So how easy again is it to get access to that industry?
I think it's, as everything, you need to do it for a long time. You need to be in the ecosystem, right? We've been investing in aerospace and defense before it was trendy, let's say, right? So we're in the ecosystem, and more importantly, the market needs capital. There is a huge focus on investing in the space, and private equity can bring capital. That's what they do.
How do you feel supported by the political side of things? Because as you were saying, they all want to raise private capital because obviously the finances of the public finances are quite stretched already. So how do you see that?
I think our initiative was heavily supported not only by the state, because the state is actually invested in our strategy, but also by all the major in the industries. And it's also another way to be, let's say, different or to have an edge, is we have all the French major in the industry that have been investing and our LP in our fund, which is great because it's essentially smart capital, bringing not only capital but also ideas.
Another aspect or field you're investing in are data centers, the whole tech world, which is seeing that more or two of these big tech names are now filing for IPOs. Let me ask you about the rationale to go into the data center business given the high valuations.
So firstly, we mainly invest in data centers on the credit side. So it's a space where we've been very active, honestly, over the past 3 to 4 years. It was new. It's also a good illustration of how the asset class, going back to private credit, can evolve, right? Because it's serving new purposes. So we've been active in different jurisdictions and essentially as a senior lender. So to your point, yes, there is sort of capital exuberance in the space. I think we all know AI is too big to be ignored. It's here to stay. So the way we support this trend is by providing lending capital that will essentially contribute to the building of assets. And I think the play here is that there is still a massive shortfall in supply, especially in Europe.
Let's look at the second half of this year, because clearly the first half, at least in the private equity space, was again quite muted because the recovery didn't materialize. So what are you expecting for the so-called second half?
I think everybody in the market expects deal flow to pick up, right? The attention has been on returns, sometimes on underperformance. There is probably some underperformance here and there. I think it's no surprise because we're late in the cycle again. So there will be increased dispersion between sectors, and within each sector there will be winners and losers. Now I think what's missing in the market is yes, deal flow to pick up, and for this we need the valuation gap to narrow. I think buyers and sellers are still struggling to agree. But we have hope that this sort of pick up in H2 for sure.
So quick question, just a very quick one. So do sellers have to settle with a lower return level?
Well, at some point they will probably have if they want the asset to rotate, right? I think for long in the market we've been talking about DPI. We know the DPI is lagging behind. That's a distribution paid to investors. And in order to accelerate this DPI, some asset rotation will have to be performed, and it will. There is no other way, I think.
Maxime, thank you very much for talking to us.
Thank you for having me.